My man, Super Cash.
What's up, guys? How you doing?
We're good, man. How you doing? You guys have been nothing but busy over there in Jupiter land.
That is a fact. But before we talk about Jupiter, Jess, can we talk? Can I share our history together? I don't even know if you remember this, to
Of
be
course I
honest.
do. Yes, please
Is that
do.
right?
Yeah.
Let's go. I'm excited for
Listen,
this. Let's go.
Josh, it's great to meet you here as
Yeah,
well.
likewise.
I love what you guys are doing at 11 a.m. But I didn't want to start this without sharing a little nostalgia
Some
lore
lore.
here. When I got, I used to work at something called Super Team. I was part of the founding team there, helping onboard builders to Solana. And in the first few weeks of it, I just kind of cold DM'd basically everyone I looked up to on Twitter at the time. And Jess was one of them. And he was one of the very few who actually got on a call with me, spent like 30, 45 minutes talking about DAOs, giving me a lot of really helpful advice. And I just want to let you know, it means a lot. It's crazy to be here 4 years later, now on the stream together. But I appreciate all the support you gave us back then, and all the support you gave to builders.
What I remember from that was probably giving some I won't call it advice, some reactions to things that you, I think, held very strong against and very smartly did so. I can't remember exactly what it was, but I think I probably brought some strong opinions. And I appreciated your strong opinions back, and sort of the super team movement there, I think, has been undeniably effective and impactful in the Solana ecosystem. And I think, frankly, we're seeing a lot of other ecosystems borrow heavily from some of your early insights there. So yeah, kudos to you, and wonderful to see where you've landed. I think you're sort of sitting at the helm of a very interesting ship, one that controls a lot of liquidity flows through a very large and exciting ecosystem. And I don't know, man. I mean, so we don't have a ton of time here today, and I think we can get lost into a bunch of stuff here. And so I do want to kind of maybe just start off at the high level. Like, is this sort of the everything app, the super finance app, is this the opportunity that you see in Jupiter and that you're running at, or how are you contextualizing the category that you're building in?
Yeah, I think that for too long, DeFi has been dominated by these kind of point solutions, right? Where you go from one website to the next one, to the next one, to the next one to try to do all these different financial things. And that's not a model that you see work in any other mature industry, for the simple reason that like brand trust and habits compound over time. And so what you're seeing in crypto right now, as you've seen in other industries before, is this kind of approach to horizontally expand, to try to add more value per user wherever possible. And so the end vision for Jupiter is everything that you want to do on chain, you should be able to say, just use Jupiter as you're trying to do it. And so this super app thesis, this kind of DeFi super app that we're building, we do believe has the potential to be kind of like the consumer face of DeFi going forward, especially as DeFi and TradFi kind of come together in this unified finance lens. And there's a bunch of different ways in which the products support each other. So what we're trying to do is just create like anything that a user would want to do on chain, do with us. That's why we just launched prediction markets, for example, and we're going to continue to like keep running things out there. I think we have like 12 revenue generating products now, and by this time next year, it'll certainly be more than that.
Is that true that vertical integration is something you see in traditional finance? I feel like you have, your traditional stock brokerages, you have maybe the robo advisors, you have Robinhood if you want to, ape GME or whatever. You have, DraftKings in the sports book. So is that true that that's kind of a model that exists in trad finance?
I think that it exists not just in finance, but in other industries as well. Like if you look at banks and kind of like where they started, oftentimes it was like very simple, like retail deposits and loans, right? And then it slowly becomes commercial loans, and then they become sort of large scale brokers, and then they have these trading wings and asset management and all these other kind of things. It's the same in healthcare. You start as like, a little hospital, and then all of a sudden you're doing a ton of different services around it. And that pattern keeps happening, especially for, successful teams, precisely because once the user comes, actually, I'll use a Jeff Bezos kind of idea here, right? Is the first time you go to Amazon, you're just looking to buy a book. And the second time you're like, oh, they also sell shovels or whatever. And you build up that habit that over time you start to say, hey, I can just go to one place and get everything. Why would I want to look in other places? And I think that's increasingly going to happen in DeFi as well, and is true for a lot of financial applications, right? It's like, why do people trade? All due respect to, some of the big players out there, but like, why do people trade at places where the fees can be as high as like 1% to 2% per trade? It's because it's a habit, and they have like other deposits there or whatever else might be.
Yeah, what is the sort of, I guess there's some aggregation that happens that allows you to kind of vertically integrate. And I think the doing that at the consumer level is obviously a very big opportunity. And also I think it is a very challenging one. We can probably count on our hands the ones that have done that very effectively. So is is it the retail user base that sort of app installs? Is it the liquidity? Like what is the competitive edge here that kind of where that aggregation happens that allows you to have this strength in stepping into other categories?
So it starts very much with just sheer number of users, right? We're the most used app on Solana and arguably one of the most used apps across anything. I think we've done like 33, 34 million wallets have connected to Jupiter at some point over the course of the year.
Wow.
Wallets are not users, of course, not one-to-one, but it's a lot. It's a lot of folks. And then it goes back to that kind of like that trust in the product execution ability of the team and the strength of the community itself. So very concretely, you see this with Jupiter Lend, which launched just about 2 months ago. In 8 days, ran up to $1 billion in total supply. I believe it's the fastest growing Solana protocol ever. And what was so like inspiring about that is that when we launched and ran up to $1 billion, other borrow lend protocols on Solana did not go down by $1 billion. Right? They actually increased during that same time period, which is pretty incredible to say. What we were doing was bringing on net new lenders, net new borrowers that hadn't existed before, because they were coming to the Jupiter website, they use the Jupiter mobile app, because they trust the Jupiter brand. Only for that reason will they try out lending in a way where maybe they wouldn't for anyone else. But they have to kind of rebuild that trust and that conviction. So it all starts with kind of aggregating that user attention and that user trust.
So obviously, internet capital markets is the dominant meta today. I think we have a lot of complaints about the ways it's currently being done, or the way a lot of projects are approaching it. I know you guys are stepping into that category, so I'm curious what you think others are getting wrong and what you think you guys can bring to it that'll get us the internet capital markets that we're dreaming of.
Yeah. Are you talking about the ICO Launchpad specifically?
ICO Launchpad, yeah.
Gotcha.
Yeah, sorry.
See, Josh,
it's a horrible term.
If you're in the trenches, it means one thing, and if you're zooming out like we should, it means everything.
I mean, that was the right question. I'm glad that you have a broader view on what internet capital markets is.
I mean, I would say, like, for what it's worth, like Jupiter is itself like a stellar example of what internet capital markets can do. Yeah. No VCs over here, right? Kind of like grew from the bottom up. Now we have a 50% kind of revenue share to this Litterbox Trust, which then accumulates the Jupe token. And we have quarterly token reports, all this other kind of stuff. But for the ICO Launchpad specifically, we saw kind of problems at both ends of the barbells, right? So on the one end, we saw people basically just doing 2017 all over again. That was a very fun time. A lot of people made a lot of money. Not me, but other people did. It's great, whatever.
Look at your
but it had some real problems.
There. It's maybe not doing so good today still.
The problem with all of that is that it was a lot of trust me, bro development, right? Give me the money today, and at some point I'll put out a token. And give me the money, and 30% will go to our ecosystem fund. How do you know? Trust me, bro. Why would I lie to you? And then you see the founder in a fucking Lamborghini or something like that. Like it's all just kind of like one mixed up kind of pot. So if you just run that back to directly, I think it's not ideal from like an investor perspective. And then there's a lot of like interesting experiments that I think are happening right now across Solana in particular, where people are trying to find ways to kind of like tie the business revenue to the token and all these other kinds of things. And hopefully those experiments continue to succeed, but they maybe go a little bit too far, right? What we're trying to do is find that happy middle, where if you are a project that wants to raise on chain and use internet capital markets to your advantage, you should do it in a way that instills trust, right? That creates this don't just trust, but actually verify as well. So our model has multiple rounds of pre-sales where you can have your community come in at a cheaper price, or have loyal users come in, or whatever else you might want to do, partner, give Jupe stakers an opportunity to get in at a preferential price. And then critically, we have these on-chain vesting contracts. So at any given time, people can actually see where the funds are and when they're going to be unlocked and where they're going. And then finally, you have to launch the token. This is not a pre-sale platform where you just raise some money and then you come back 6 months later and maybe you do a token, maybe you don't. You do the raise. When the raise is done, that's when the token goes live. And so with a few of those kind of mechanics, we're hoping to kind of take the best of 2017 and modernize it in a way that actually takes advantage of the technology that's been built.
Have you had one come out yet, or is that still scheduled to be done?
The next one is coming up relatively soon. I don't think we have a firm date, but the first one will be Humidify, which is the #1 prop AMM on Solana. They're doing like a third of all volume on Solana these days, which is crazy. And yeah, we're really excited about that one. And the ticker is WET for what it's worth. So the memes kind of make themselves too, WET on the DTF Launchpad. That's what it's called, DTF, Decentralized Token Formation. Get your mind out of the gutter, viewers at home.
I mean, you put us there, brother. I don't know what you want from me here. Okay, so one of the interesting things that I think of a project that's kind of launched in the way that you guys did and kind of come out of the era that you've come out of was this sort of DAO nature and governance and the evolving expectations and desires, I guess, around that type of governance. And so, and I think, notably, you guys have sort of scaled back governance in a certain way there. I'm curious how you're thinking around just the structure and the ownership / governance of Jupiter has changed in the past year.
Oh, this is like a 5-hour podcast question,
You
but
have 2
I would
minutes.
say to start with the DAO, we wanted to take a big swing and see if we could actually get like massive numbers of people involved in governance instead of like the 20 to 100 people that you see in most governance forums. We want to see, hey, can we bring this at scale with hundreds of thousands of wallets? And we did that in the first year very effectively, right? So 300 to 400,000 wallets, voting in different proposals. We did, I think, 24 proposals over the course of like 13 months. So it was like really active governance. But what we discovered was that we had taken it a little bit too far. And in fact, the overemphasis on the politics of the DAO and the token were actually overshadowing the kind of progress of the products themselves and the good work the community was doing and so forth. And, as with anything that becomes like very politicized, it started to actually divide people rather than bring them together. We still like believe deeply in governance. In fact, we just completed a vote like literally yesterday. So we're still doing governance and we still want token holders to have key kind of ownership over major protocol decisions. But we're kind of narrowing the focus. Before, we wanted people to be involved in everything. We wanted a DAO workforce. We innovated on this concept of working groups and so forth. Now we're kind of bringing it back to basics. We listened to the token holders. They said very clearly, we want a voice, but we don't want to have to be glued to our screens and be participating in this as if it's like, like our neighborhood association or something. Just bring us in when the things really matter.
Did Jess not warn you about that on your initial call?
He did. 4 years is a long time. You forget some of the key insights on that one. But so yeah, now we still have governance. It's much more kind of streamlined. It's still, one token, one vote. We don't have any kind of complicated models there because again, we have just so many folks. But yeah, we're going forward tight and refined in this kind of fresh start for the Jupe token.
I got it. Interesting. And how does I guess interested in both how you're thinking about this on your ICO launchpad and also in the Jupiter context, like buybacks, value flowing back to the token. Is that necessary? Is there a right time for it? How do you think about just
the revenue meta, man? Your comments on the revenue meta.
Yeah, I mean, again, it's another like 5-hour thing. So I think that the revenue meta is just called building a business, and I think it's a very important, and it's crazy that we have to talk about it as a meta at all. Jupiter is going to do something like $190 million this year in revenue. We're a very kind of profitable business, and that's great. And we have this kind of direct tie-in between the business and the token, right? We want to make sure that token holders had this alignment, this incentive to go out there and actually preach it. I would absolutely not recommend it for the vast majority of projects. And I think you can make an argument that we did it a little bit too early as well. I think for most projects, those dollars, if you are earning revenue at all, are going to be much better spent on reinvesting in growth, acquisitions, hiring top talent, those kinds of things, than they are in going back to the token. My kind of insight here is that there's a secret zone. There's like a very specific zone where it works. Like if your revenue is, making up a number, but like 1/5 of your FDV, then buybacks can have a material impact. But if they're not 1/5, it's hard for them to really, drive long-term price action. And I don't think that price action fundamentally comes from, metas or anything else. I think it comes from building products people love, having a narrative that people can believe in, and having a clearly defined vision of where the world is going. So buybacks are great in some projects. I do think that going all in is probably better than going halfway for a lot of new projects if they do want to go that way and make it like a fully kind of unstoppable machine on chain. That is interesting. And I think we'll see more examples of this come alive. But anytime I talk to a founder who's just kind of starting off or they just launched a token, I'm like, unless you have lots of fees and you know what you're doing, buybacks can be a dangerous thing.
Yeah, it is interesting because in the way they answered that question, like, yes, we got to go build businesses here, and also my sense is that the buybacks have been far less effective than maybe the timeline has sort of suggested it could be. And I think there has been a lot of discussion around the Jupiter token and the buybacks that you guys have been doing there. And I think even if looking at Pump, who's just continues to buy back massive amounts of tokens, and really not seeing that represent. I mean, maybe we're clearly seeing it represented in the chart in some way, but to me, it feels like it's underrepresented.
It's hard to run the counterfactual. Like if we weren't doing buybacks, what would that do to the Jupe price? I don't know. Maybe it'd be even lower. It's hard to tell. I do know that if we had those revenues, we could do a lot of great things. But in our particular case, I think where we messed up, honestly, was we were doing this buyback and hold. And that was causing a lot of uncertainty because a lot of token holders were worried, hey, is this, whatever, we had 130 million tokens in there right now, are these just going to be like released as emissions at some point? Is there a massive sell event coming or something like that? Or like, is the DAO really the best steward for spending these tokens, or are they going to spend it, enriching stakers or something else? And so the key lesson is like, whatever you do, try to make it as clear as possible. Don't kind of like put off the decision, say what it's going to happen as soon and as upfront as possible, and give the market the certainty that it wants one way or the other.
Yeah. You guys were so we had the Titan Exchange guys on a while back, and you guys were on the timeline recently with some drama around that. And maybe don't need you to comment on that specifically, but you guys are like the big boys on the block. And I hear it in a bunch of different ways, right? People either hoping to get something because of the sort of liquidity flow that you guys have, or feeling like they are not getting something because of the liquidity flow that they have there. So I'm curious, maybe just at a meta level, how Jupiter needs to show up, how you should approach competition in this space, and maybe take it however you want. It dominated the timeline for a very short period of time, but I think it's meaningful.
I'm glad it was only a short period of time. Honestly, it's a bummer to have to do that kind of stuff in public. I think it's a bad look for everybody, honestly. But push came to shove. But in general, I think that like our constant focus, this is going to sound like marketing speak. I swear to God, this is not marketing speak. It's like genuinely what me and Meow and Xiong and everybody else talk about all the time, which is like DeFi is so goddamn tiny right now, right? Like maybe there's 5 million real like power users of DeFi, maybe across all ecosystems. There's about 500 million users of centralized exchanges, right? Like there's 100x to be going for. Anyone that is trying to like elbow out competition or slow down somebody else's growth is just focused on absolutely the wrong thing, is like our view, which is why we do a bunch of stuff to help grow the ecosystem. Like we run the second biggest validator. We have a bunch of APIs that anyone can use for free, and other ones that you can pay and then get like incredible Jupyter level performance. We run the verification list for the ecosystem. We do a bunch of different things. We open up our system. We have 130 liquidity sources added within Jupyter's DEX aggregator itself, right? And so like our view is, to whatever degree possible, we want to collaborate rather than try to compete with folks. And even when we are competing, hopefully it's like good-natured steel sharpens steel kind of competition rather than try to squash the little guy. There have been people who have certainly like complained and been like, oh, Jupyter is taking forever to integrate our new AMM, and look how innovative it is and whatever else. And the truth is, we have 12 different products. We only have 100-ish people. There's not that much time in the day. We're trying to integrate everyone we can, but we just finished pushing out Ultra V3, which is a major step forward in our training engine. And I think we have 5 or 6 new integrations coming up in the next like 3 days that are over there. So we're still like very actively trying to support people on the liquidity side in particular. But the truth is, our APIs are used by more protocols than anyone else who has APIs. Like Jupyter is both the biggest product and the biggest platform. And there's a lot of ways that we could like tighten the screws over there. And we choose not to. And we've done that consistently. Even as simple as like JLP and JupSol, which are 2 of our 3 tokens. They're used all across DeFi. We don't try to block anyone. We don't make life hard for anyone to use those. It's a massive percentage of other borrow lend markets, TVLs. We have a borrow lend market. We could make life difficult for them. We choose not to, because that's not the right ethic to be bringing at this stage in the game.
Okay, so I guess I am curious about, the core challenge here for all of us is how do we go grow this market into new users? You're talking about a very, a focus on growing the consumer base for Jupyter products. Mm-hmm. I'm curious what the effective growth channels are for you to break out of just the crypto market and into that maybe crypto adjacent user group. What's working?
I think I see our growth is kind of like there's a few levels to it. So the first one is just kind of growing Solana appreciation to people who are maybe not so exposed to Solana. And there are APIs, they're like kind of the weapon of choice. So we just announced a partnership with Uniswap last week, where now anyone who goes to Uniswap wants to trade Solana tokens can do it powered by Jupyter, right? So that's how we get.
Make me sign in with that Solana pop-up being like, do you want to sign in with your Solana wallet on Uniswap? I'm like, no, brother. I do not actually want to do that. If you could not pop that up, that would be great. Anyway, sorry, that's telling me.
I think you should try the Jupyter extension wallet. We'll see if we can't change your mind, because we have one of those now as well.
All right, cool.
Never sign another transaction again, Jess. You can actually just like, it's one click, it works. Anyway, but so yeah, there's like one step, which is just like partnering with more protocols and more projects to bring them to Solana. And we have a bunch of partnerships in that degree, including like, Binance and Bybit and OKX and all these other like centralized exchanges. And then beyond that, it's like, how do you actually get more people in the door? What we've been doing a lot lately is like IRL events and creator kind of partnerships, and just trying to like work with folks who are outside of the CT bubble, right? So some of these might be artists, some of them might be like YouTubers, or anything, anything else that can kind of like build up the broad-based awareness. And then finally, we think about growing into the institutional base as well. Like if you were to ask a room full of 100 like banking people, what's the one word that comes to mind when I say crypto? Scam is the only thing you're going to hear, right? So like a lot of the work is honestly just talking to a lot of these TradFi institutions or asset managers and explaining that, hey, this is not all hocus pocus. Look, we have a great business. This is why the business is good. It's diversified, et cetera. And trying to get that level of capital on chain as well. And so, I just had a meeting 2 days ago with a bank that every single one of your users or every single one of your listeners would know. And we were talking about like, hey, how do we like commercialize or how do we take commercial debt and put it on chain? And like, what does that even mean? How do we do KYC? Is everything permissionless? And it's like, no, actually we can build, KYC based products as well, and so on and so forth. So I think a lot of that is how we get more of that liquidity on. It feels uncomfortable, right? Like to people that are like, no, it should only be DeFi, it should only be permissionless, et cetera. But the truth is, in order to expand, you have to build what people want.
I think talking to banks is a great way to remind you of how early we are,
That's right.
and also the core need for crypto. Every time I have to go send a wire, I'm like, y'all, come on. Kash, we could continue this for a long time, but unfortunately, we have to let you go. We are very specifically interested in how new assets are brought to market and issued, and I think the wet token is one that people will need to kind of keep an eye on to see your approach to doing it. So we'd love to maybe dive into that at some point in the future, maybe with them or with you. So I'll reach out separately for it. But I think it's one of the biggest open questions and probably the most impactful questions is how do we actually confidently launch tokens in a way that supports their long-term growth and value there. And yeah, excited to see you guys step into that space, and we'll be watching closely.
Appreciate it, guys. Thanks for having me on.
Peace, Kash.